Thanks for tuning into this conversation. I'm Neeraj Shah. And the reason why we're trying to talk to the company, or we are going to be talking to this company, Quick Heal, is not just because of what they've done in the quarterly numbers. Actually, the genesis of this conversation stems from a conversation that we had with Checkpoint. Checkpoint is a $20 billion company out of the US at Davos, and they had spoken about how they believed that the spends on cybersecurity and internet security will only go up over the course of the next decade, over the next 5 to 7 years at the very least. And on their base, Checkpoint believed that the growth rates could be 20 to 25%. It got me thinking about why is it that we do not have such a business out of India talking about such numbers and focusing on cybersecurity. Pat came the answer about Quick Heal. They have been around for a while, maybe focusing on the retail consumer space. And since the advent of Vishal Salvi, who is the current CEO of Quick Heal, about 12 to 18 months ago, I believe they have shifted the focus to the enterprise segment in a meaningful way as well. So it would be lovely to understand from him how he sees the space over the course of the next 3 to 5 years, and what will Quick Heal's participation or role in this growth story be, if there is one. Vishal, great having you. Thanks for joining in. I hope all is well.
All is well, Neeraj. Great to be here.
Thank you. So Vishal, at the outset, just lay it out for us. I mean, cybersecurity, everybody knows is a big thing. We don't have too many success stories out of India. There are a lot of IT companies which have a cybersecurity division, for lack of a better word, but a cybersecurity segment or division within them. In fact, all of them might be having it. Doesn't quite make noise. And then we have a Quick Heal and a couple of other smaller companies maybe trying to make their mark, but haven't quite made it. So give us the landscape.
Yeah, I think been in the industry for 25 years now, so seen it very deeply across the global spectrum as well as regional and local as well. And clearly, it is Silicon Valley dominated. Of course, there is also a startup ecosystem from Israel and some other pockets of different parts of the world. But primarily, one begs to ask this question as to why is it that we don't have a large cybersecurity product organizations coming out of India. And while there have been great innovations and good startups, I think just to have a short-term market gain and traction, I think they've moved their bases to Silicon Valley, and hence we have not really had a real growth story apart from Quick Heal, which has been around for 3 decades. And as you rightly said, that Quick Heal has been focusing on consumer and retail market for many years, but last 7-8 years we pivoted to enterprise, and that's the reason why I got motivated to come here, to really now take the company from where it is and laid a very strong foundation by the founders to the next phase of the organization in terms of creating a alternative to the globe in terms of cybersecurity product company coming out of India.
How easy or difficult would that be? It won't be easy, but how difficult would it be, considering that, I mean, there was this NPP Act, if I'm not getting it, excuse me if I'm not getting it completely right, but it's getting some of the global companies to set up shop in India. And then all of these IT services companies tell me about they having this segment and they're focusing on that segment too. So why would a Quick Heal, for example, succeed while your presentation speaks about you are India's only full stack enterprise cyber security platform provider? Why would a company like yours succeed?
So I'll tell you why, Neeraj, because there are multiple aspects and the timing couldn't have been better than what it is right now. The first aspect is that the geopolitics is changing so dramatically that every country needs to have a cybersecurity strategy in terms of how it needs to protect its own sovereignty and have its own alternative. And we are well poised from that point of view. That's number one. Number two is that if you look at in terms of how the cybersecurity industry has evolved, India has become one of the important hubs for the engineering work that happens in cybersecurity product market. Whether you're talking about cities like Pune, Mumbai, Bangalore, we have all the large cybersecurity product companies in the world have setting up their shops. So we don't really have an issue of talent, right? We have a lot of access to the talent. And so that is another tick in the box. The third aspect is that Indians have proved that, globally, some of the top companies in the world have got, Indian origin startups and or CEOs who are driving it. So why not an Indian company doing it in India? Why do we need to go outside and do it? And that's one of the questions I always ask myself. And this opportunity is really, gave me that opportunity to come here and start really having that vision to get all of these alignment together and set ourselves for that success. And given the fact that we had that foundation already, we can actually, build on that and propel the company to at a global level. Now, having said that, it is still not going to be like easy, right? You're going to have a great strategy, a proper strategy. You need to have a vision in terms of what you want to do. You have to build the right culture in the organization to, have that opportunity and then have a very flawless execution plan. And that's really what we are doing right now in terms of focusing on execution and keeping our head down and making sure that on quarter basis, we are constantly making progress in terms of our culture of our people, in terms of the talent that we have, in terms of building the right solutions and right products, in terms of pivoting our organization to have the right sales mindset, and then, building the right brand, not just Quick Heal, but Securite, which is our enterprise security brand, so that we can build a strong foothold in India to start with and then grow, just like how we have done it in the consumer business.
Okay, let me bring in some numbers here and then I'll again shift focus to why is it that a company like yours, I mean, just being in India, would it be the, maybe it's a necessary condition, don't quite know if it's a sufficient one, but let me try and bring in some numbers to the answer that you just gave, right? You spoke about making some progress on the culture, on attitude, etc. It's not quite showing in the numbers, right, Vishal? I mean, I'm looking at your sales numbers, they've largely been flat for a number of quarters now. In fact, the latest quarterly numbers, your margins have really come off. So how, I mean, tie it in with what you're doing at the company level versus what's happening to the numbers.
That way, Neeraj. I would see it from the other way, right? So if you look at in terms of our year-on-year Q1 performance, so we have 37% growth as compared to our last year's Q1 performance. We were 15 crores a negative EBITDA last year's quarter one. We are right now 2.6 positive, so it's a 17.6% increase. We have additional 20 crores in the bag right now in the quarter one itself as compared to last year in terms of performance. We are flattish in terms of our Q1 performance, and compared to that, in terms of the fluctuations that used to have, because Q1 has generally been our a weak quarter traditionally in the organization. We're trying to actually address that and bring in more predictability in terms of how our performance is coming on, both in terms of EBITDA as well as in terms of revenue growth. So I think I'm extremely happy with the way we have progressed. We have always said that, we will gradually demonstrate that, how we are progressing on a quarter-on-quarter basis. We have always focused on profitable growth, and the last 4 quarters, we have ensured that we are delivering that. We have shown steady growth. If you look at even in the last 2 years, you moved from 20% enterprise, versus consumer split. Today, we are at 42% enterprise and consumer split. So all the trends are moving towards where we want to go. So I'm extremely comfortable with what we have delivered. Of course, we could have done better. We have had some headwinds in terms of how the consumer business adoption is growing. And within that market, while the competition is really struggling, we are sitting pretty in terms of how we are growing on consumer side. On the enterprise side, we had headwinds from the central elections where a lot of the government deals have got deferred to Q2 and Q3. But in spite of that, we have delivered this result. So yeah, I mean, we feel comfortable, and I wouldn't put it the way you put it, Neeraj.
Okay, I mean, I was, okay, so leave out for the Q1 seasonality, I'm just saying that the operating margins did come off relative to the previous 3 quarters. So that's the point I was trying to make. But I buy your argument that maybe there were one-offs. So are you saying, therefore, Vishal, that Q2, Q3, Q4, I'm right now focusing on the here and now before I focus on the long term. But are you saying that after the Q1, relative to the previous 3 quarters, the slower Q1 growth on the operational front, will it improve in the quarters to come?
Yeah, I mean, our track record for the company has always been that, right? The Q2 and Q4 has generally been a very positive quarters for us, and you can expect that something similar would happen. So we are uh, extremely bullish about how we should look at a short term as well as a long term, and we are working towards giving that improved result as we have done in past.
Now, a word on the strategy, Vishal. You mentioned about how enterprise is 42, if I'm not wrong, right? I thought it was 37, but 42 right now. So, how does this work? Because typically, I would believe, I mean, and maybe I'm wrong here, so excuse me if that's the case, but I would believe that if enterprise versus B2C goes up, the negotiating power on pricing goes down a bit. Maybe the working capital cycle gets elongated, and I believe in your case, the debtor days have moved up. So how does that shape up as you focus a lot more on enterprises, which I presume is the strategy?
Absolutely. I mean, the reason I'm here is for enterprise, right?
Okay.
That's really what I do, and that's what I know, and that's what I've done in last 3 decades, right? So clearly we want to scale and we want to grow, and also that is where the growth is, right? The consumer market is deeply commoditized. We are obviously adding significant value because we protect and market have a market share of 33% in India. We have 9 million endpoints, so we are definitely adding value, and it propels our understanding of what's happening in the space, and gives us that edge in terms of building the right tech to solve the problem, right? So we want to make sure we straddle on both the businesses, consumer as well as enterprise. But enterprise is where the growth is. We are leaders in the SMB and the micro space already in India, and what we are doing now is building and scaling our products in terms of their maturity and readiness, so that we can actually meet the demands of the mid market and later on to the lower end of the large enterprises. So that's really what we are focusing on. There's a huge demand out there. There is a lot of unserved customers who have not yet used some of the products that we have already introduced in the market. So I think we are, from that point of view, focusing on that growth. And India obviously has a huge potential, given that we have such a strong digital ambition for the country, both in terms of government as well as private sector. So I think that's really what we are focusing on, and that's what we're investing on as well. And we believe that that 42% will become 60%, 70%, 90%, because that's the place where the growth is going to come for the company.
So could it have I mean, would you be able to do that while simultaneously maintaining your operational metrics or improving them maybe, and at the same time keeping a lid on the elongation of the working capital cycle?
Yeah, I think we are actually very comfortable in terms of our cost. If you see, one of the things we are very predictable is our prudence in cost management. With the advent of AI and tools and automation, actually the amount of the value that we can create in terms of creating better software more productively is higher, and so which means that we will have better control in terms of how faster and how cheaper we can build our uh, products. And I think we feel very comfortable in terms of how we are managing our cost, and we will continue to do that. We both building in the right productivity measures as well as not shying away from investing where we need to invest. While that continues, I think the focus is going to be on how do we create that value layer by looking at all the data that we are having in terms of the signals that we get from the 9 million endpoints that we manage, and build solutions like threat intelligence, malware analysis platform, and so on and so forth, and bring that to our customers where we can make an entry in the large enterprises because they see significant value. And we are the only Indian player who understands these signals so deeply in terms of what's happening in the country and give those unique features back to them. So I think both of these together, I think we feel we are very comfortable in terms of what we are building for the future, especially in terms of our cost to that structure is there. And I think to address your earlier question about the negotiations and the value, see, enterprise deals are always going to be on a deal to deal basis in terms of how we negotiate and how we give the right value proposition on every deal which is there. We feel very confident that we build the right solutions and the right rates to meet those demands. So I don't think there's going to be a challenge. Also, the DSOs are far better in enterprises as compared to consumer business. So I think over a period of time, as we start, adding more and more enterprise business to, I think our predictability of collections and our capital workflow is going to get better. And that's what we've seen so far as well.
Oh, because I thought a retail consumer like me, for example, would pay upfront versus an enterprise would take time to pay. So that's why I thought that there will be a delay as you hike up enterprise. You're saying that's not the case.
That's not the case.
Ah, interesting. Okay, okay. A couple of questions around, this. You had a partnership, I believe, with Lenovo back in 2021. At least Quick Heal did. You come on board later, but there's this decreasing market share of Lenovo. Is that a concern or not really?
No, I think, see, the thing is, bundling of antivirus into laptops is a challenge for us because the global players are able to ship it together. We are countering that with our own strategies in terms of how we build it. We have one of the largest distribution network of our partners who are really extension arm of Keel. They've been there, loyal to us, working with us, working with our customers for so many years, and that becomes the USP. And we feel very confident that that network is still loyal and working closely with us. And while we do better, they also actually prosper as a part of that. So while we do that, we are investing in our digital. We have hired our new head of digital and trying to make sure that we have the right strategies on all the aspects related to that as well and grow the business. And also then, how do we retain our customers and, how do we make sure we constantly add more and more features. So I think overall, the consumer strategy, there are multiple levers. You can see the way we have improved, over the last quarter's performance and where we are today. I think, it's showing the sign of revival in the market, which is degrowing. We are showing growth. We posted growth last year. We are poised to give the same level of growth and more this year. So I think overall we feel comfortable. But having said that, there's a lot of work happening, a lot of levers, and also a lot of innovation. So you can expect us to make more announcements in the consumer space in the coming few months.
Okay, so I have a couple of questions before we wrap up. One is, are you in a position to be able to leave an indicative or a formal guidance about what you do, for example, in FY25, considering the start that you had to the year?
Yeah, I think right now we have not yet got to that stage where we'll start giving guidance. For that we need to bring in more predictability and maturity in the business model. But I'm sure in future we would get to that level of maturity and we would start giving some more KPIs to the market in terms of how we are performing. But yeah, I mean, we are always striving towards delivering on all the qualitative aspect that I just talked about, and so far we've been doing okay. But we just want to make sure that we continue to do that.
Okay. Okay. In which case, just one last question, because we do not have too many numbers to work with, right? I mean, Quick Heal per se, when I look at the last maybe 9 years, since 2015, if I'm not wrong, is around this, unless I'm wrong, 300 crore top line number, right? So I'll leave out the numbers out, but I would love to understand, Vishal, for somebody who was a senior management in a large IT firm, one of the leading firms, to come to a 300 crore top line company, you've seen something, and you've seen something in terms of where the growth can be, not in 1-2 years, but let's say 5, 7, 10 years out, right? One is the qualitative aspect, and you explained that beautifully. I would love to know, do you expect the opportunity size to be so large that Quick Heal can be, the revenue size of a firm like Quick Heal can be 5, 10, 15x from what it is right now or what it has been for the last 6, 7, 8 years, because it's just not able to get out of this wedge?
I think, like I said, right, the company has set a strong foundation. See, while you can see it from that point of view, what you can also see is that we are the only Indian company which has weathered the storm and still stayed relevant with a 33% market share, deeply profitable, uh, zero debt, cash rich. and still maintaining that market share that I talked about, while the rest of the world, there has been significant consolidation, right? All the big players that we knew about in the antivirus business have vanished. We still stayed relevant. So it's actually a very positive success story, Indian's product success story. Now, yes, we cannot sustain this only as a consumer product, and the founders realize that, and hence investing in the enterprise product for last 4 or 5 years, and now that has reached to 42%. And now for it to scale to the next level and sow the foundation for what a global cybersecurity product company should do, they are hiring people like me into this so that we can actually set ourselves for success. And as you rightly said, it's a long-term story. I'm a very long-term person, right? I'm not a short-term person. And all the things that I've learned working in global large organizations are actually coming to bear right now in this organization. So it's a fantastic opportunity for me to come here, and the scene is all set to really use that experience and bring all that to bear to make sure that we are able to do the right things for this company, for it to actually get and reap the potential that exists in the market, as well as potential that it has built over a period of time.
Could that opportunity make it multiple times the revenue size of what it is currently? I would just ask you that. Is that a possibility?
I think we are always focused on that aspect. Apart from creating value for everybody, you have to always make sure that we are focused on top line and the growth.
Growth,
So
yes.
we are definitely very extremely ambitious about the future. But we want to make sure that we calibrate in such a way that we do the right things right now. We cannot run faster than where we need to. So we have to see, product management in any product that you develop takes anything between 18 months to 24 months before it becomes fit for market, right? And so we have to make sure that we allow that time and efforts which are required for it to demonstrate that. But we also understand that we have to show progress on a quarter-on-quarter basis. So we will make sure that we balance all these aspects. We look at long term, but also don't lose our sight on short term. But yeah, I mean, whatever you just said in terms of our potential is definitely there. How much we do it, how much we deliver, only time will tell. But we are doing the right things. We are playing the right game, and we hope that we will get our rightful share from the market as we start progressing and as we start building more and more solutions.
Wish you all the best for this, Vishal. Thanks so much for taking the time out and speaking to us. Really appreciate your time.
Thank you so much, Neeraj. Nice talking to you.
Likewise, and viewers, thanks for tuning in.